Good evening and welcome to the March seminar live from IBM Innovation Center in Foster City, California. Today we are privileged to have Jeff St. John of Greentech Media talk about some of the smart grid trends and also talk a little bit about the conference that they just hosted recently last week, if I recall, in Westlake Village, California. That's right. And share some of the findings from that conference and also provide some of his perspectives on smart grid. I'd like to say a thing or two about Jeff and Greentech Media before we get started. Greentech Media provides a lot of analysis. They cover a lot of events. And for the last 4 or 5 years, as the smart grid has really ramped up here in North America, Greentech Media's participation and contributions have been invaluable. And I have really appreciated the candor with which they bring up issues. Political correctness is not part of the vocabulary of Greentech Media. And I really welcome that because in this industry, we always have to keep our eyes wide open because what we don't want smart grid to become is another bubble. So the realistic assessment, critical thinking and analysis, and then the communication of that is very, very important. We are now at a very critical juncture in smart grid evolution. We have been living on the sugar high of federal funding. And I call it the sugar high of federal funding because it is not sustainable, neither from the tax collections nor from the business model. But it is a necessary start. It's almost like an angel investment in a startup company. But at some point, the startup has to start producing product and start producing revenue from that product and sustain itself. The equivalent of that in our industry would be private sector investment, whether it is from Silicon Valley, whether it is from the venture capital firms that support Silicon Valley, or from publicly traded companies through equity, securities. But that transformation I'm not seeing yet. I'm seeing occasional companies going public, valuations a fraction of what was predicted, and somehow the technical intrigue that smart grid has not caught on with the business intrigue. There are some amazingly intelligent people in the business, and they're creating amazing solutions. So this is not a technology issue that I'm talking about. This is about capturing the intrigue and interest of this country of some 300 million people the way social networking has, or the way light trucks have, or the way gaming has. We're not seeing that with smart grid, and yet we are in year 5, and without the electricity, none of these nice little leisurely activities is going to occur. If we have an unstable grid, or we have electricity missing for 6 to 8 hours in a day like it is in many developing countries. And if we start moving from a centralized architecture with this central power plants to this distributed energy resources, and we don't have massive influx of capital in this to modernize the system, build in the resiliency, the reliability, and have mass penetration of things like electric vehicles, distribution automation, and all of the things that we need in the homes, the smart connected devices, in order to participate in the demand response programs so that the DR programs that are being offered will actually be effective enough for the load to follow the supply. This requires millions and millions of connected devices working with lots of redundancy so that even if some products don't respond to a DR signal, others will. And we will get that collective behavior that we're looking for. So it's interesting that our community has a lot of technology-savvy people who are doing amazing things, but now I think it's time for us to put another kind of cap on and synthesize the technological innovation with some good business practices to take this to the next level so that it can meet the projections like Greentech Media and other outlets made back in 2008 and 9. Where are those forecasts, and what are we going to do to achieve it? So to make sense of all of that, I've asked Jeff St. John, and Jeff is very candid, and he will tell you what time it is without any reservation, and I'm looking forward to his candid comments and also your participation. All of you out there, there's some 77 people who registered for this event up to this evening. So I'm really looking forward to your contribution. My job was to be provocative. I hope I was, and I hope you're all very upset with me now, and you're going to respond by contributing intellectually. So, Jeff, welcome.
Thank you so much, Irvin, and thanks for everyone who's participating for coming. I think, I guess I don't know necessarily what time it is in the smart grid, but I'm pretty good at asking people if they know the time. As a reporter, I don't claim any particular technical expertise in the matters that I cover beyond that, which I've kind of gathered over the course of my roughly 4.5 years of reporting on this industry specifically. Just to let you know about me, I am a former newspaper reporter covering business at various podunk papers, including Anchorage and Richland, Washington, where I actually first met folks from PNNL and first heard the term smart grid back in 2006. But I'm also pretty personally convinced that we as human beings are in pretty big trouble if we don't wean ourselves off fossil fuels, reduce the greenhouse gas emissions we're putting into the Earth's atmosphere, and integrate just really unimaginable amounts of renewable energy and energy efficiency into our future. And that's one of my particular interests when I think about the smart grid from a long-term view, is just how all these technologies we're talking about are going to do that. But on the other hand, I'm an English major, and I am not a technical expert by any means, so I pretty much rely on technical experts like I assume a lot of the folks who are on the call are, to set me straight. So we've got a long Q&A session ahead of us, and look forward to be able to talk to you guys about all the things I bring up at that point. But let me move on here, and all right. So, Smart Grid 1.0. I know this is kind of a little bit of a tired way to talk about, technology developments, but it's pretty useful for us. And this list of Smart Grid 1.0 market drivers includes pretty much all of the things that utilities are looking at to derive value out of some of the systems they've deployed to date. We've got smart meters, AMI, AMR, that are enabling customer engagement, time of use dynamic pricing, prepay options, and the like. We've got obviously the operating efficiencies that come from smart meters. Not having to have people drive around and read meters is a pretty important business driver, obviously, for most of these deployments. But we've got a lot of other additional functionality: theft detection, remote connect, disconnect, and outage notification as well. And that's just on the AMI side. We've got a whole world of distribution grid technology going out there, trying to manage assets more effectively based on real data coming in about their status and the status of the grid they're serving. We've got volt-var optimization, conservation voltage reduction. We're talking about keeping voltages within minimum operating bounds while minimizing the amount of overvoltage that we put onto the grid to keep it stable. Saves a lot of power. And of course, we've got the reliability issues to worry about: service restoration, fault location isolation and recovery, and the like. It's just a short list, of course, but I thought I'd throw this slide at you guys right off the bat. We have got a less than complete but pretty exhaustive taxonomy from GTM Research, Greentech Media's research arm. It gives you a sense of all the different players involved here and the integration complexity we're facing here. And I bring this up because beyond just measuring the performance of individual smart grid projects or systems, we've really got to step back and figure out some way to measure the success or failure of the integration of all these disparate, often siloed utility operations into a more effective whole. And that is pretty darn complicated, and I think it pretty much sets the groundwork for some of the Smart Grid 2.0 challenges we're going to see going forward. So, Irvin is right. We're going to talk a little bit about some of the data we've collected and shared recently at our Network Grid 2013 conference last week in LA. And here are some of the Smart Grid trends for 2013 that we've got going on here. One of the first points is this growth and continuation of investment activity, both vertically and horizontally. Vertical integration, that's basically talking about, big grid giants, Siemens, GE, Schneider, ABB, Alstom, Eaton, Toshiba, etc., buying their way into expanded functionality into the grid. And obviously, I'm sure you guys have been tracking a lot of the merger and acquisition activity going on this front. And horizontal investment is how we've described the pattern of communications and networking smart grid companies availing themselves of their existing customer base to roll out broader applications across their technologies. An example is metering companies moving from, being particularly hardware vendors into a broader communications offering, and now kind of on the envelope of things, analytics. There are a couple fairly predictable reasons for this. We've got eroding hardware margins for AMI vendors and the like. We've got some complex structures for international companies to play into in some of the new international markets. For example, Brazil has a pretty stringent mandate that its smart meters are going to be built in country. So we've got North American and European and I suppose Japanese companies partnering up on that front. China is a similar story where we're seeing countries from outside China forming technology partnerships with domestic vendors expected to reap some of the big rewards of the hundreds of millions of smart meters China is expected to roll out. And we've got a continuing shift of utility business models. There's going to be a lot of change, I think, in the way utilities manage all the data, obviously, that's coming at them from the smart grid. And GTM Research is pretty bullish on, the growth of cloud-based analytics and other forms of managing this becoming more acceptable, I guess, to utilities. But we've always got to understand that underlying all these new ways to do business, utilities are naturally risk-averse, and their business, with rare exceptions, is to sell kilowatt hours. They are not necessarily in the business of saving energy, unless they're asked to or regulated in a way which encourages them to. So we've got to remember that the business case needs to make sense for them. Page down. Thanks. Oh, wonderful. Thank you. Great. Okay, so here's some of our numbers, we can, we're seeing a pretty steady climb through the next 5 years or so in the United States. We're looking at just under $10 billion in annual spend over the course of 2013 through 2015, and as I'm sure you guys are aware, a big portion of the new spending is going to be not in smart meters, which are part of that sugar rush, stimulus sugar rush that Irfan was talking about, but in distribution automation. There's also a couple other lines there that we're going to get into a little bit later. The tiny, tiny red line is our Greentech Media home area network forecast, which indicates that we don't see a huge amount of growth there. And the yellow bar on top is Smart Enterprise, which is a kind of nebulous category. I'm going to get into more detail later, but it's also going to be an area of growth. But getting back to distribution automation, why does the U.S. have to spend so much on distribution grid improvements? Well, this chart sums it up pretty clearly. I mean, the U.S. grid is just a lot less reliable than most of its first world counterparts. We've got some stats here. System average interruption duration index, that's SAIDI. Tokyo keeps their outages down to 2 minutes per year per customer. In the U.S., it's 240 minutes. That's pretty crazy. We've got almost none of the European countries getting anywhere close. I mean, the U.S. is 1 to 2 orders of magnitude more time spent without power. Safety, System Average Interruption Frequency Index, how often this happens. The U.S. is a little bit better here compared to Italy and Spain, but a lot worse than everyone else. France is kind of close, but, and really, you know, the stats for Tokyo here are pretty extraordinary. You know, people say that Japan hasn't invested in smart grid. Well, they might not have bought a lot of smart meters, but they've done a bang-up job keeping their grid working, so. This is, I'm sure these numbers might have changed. I'm looking at numbers from 2007. And if you guys have, the latest and greatest numbers, I'll take them. But back to, smart meters and AMI, despite the slowdown in the market that's kind of the effect of the stimulus money running through the system, we really shouldn't write off U.S. smart meter markets yet. This is Greentech Media's prediction of penetration in terms of percentage of customers will have a smart meter by 2014. As you can see, we got like less than 10 states that are going to be over 75%. I'm doing my math. Less than half certainly that are going to be at any greater than a quarter of their customers smart metered by 2014. And so, what do we got left? This big gray area. We've got a lot of kind of middle America. And that's a lot of territory under, grid operators like the Midwest Independent System Operator and Southern Power Pool. That's fairly underdeveloped in terms of smart metering at present. And it's also a lot of electrical co-ops, by the way, in that big middle part of the country, which we'll get into later. And we've also got a big swath of the Northeast in New England that's also still working on their smart meter plans. So, plenty of room for growth there, and that's something I've been hearing a lot from meter vendors who don't like to hear that their market's going away. So, and speaking of co-ops and municipal utilities, GTM Research has put out some U.S. market forecasts for both sectors, and I think they add up to about 40 million customers and about 900 co-ops, roughly 2,100 muni utilities. Of course, those range in size from the enormous ones like LADWP, LA's utility, to very small munis and co-ops. But we found some slightly surprising data about these customers. A lot of co-ops have AMI or AMR deployments underway, actually, although municipal utilities aren't so far ahead on that. And we're also seeing a lot of interest in vendors from in focusing in on munis and co-ops as a growth market. So we do see a lot of opportunity there. Over to Europe. GTM Research published a European smart grid forecast last year, and we see some similar trends to the United States. Where overall, Europe is starting from a lower investment base, but we're seeing even more rapid growth. AMI, which we'll get into a little bit later, is set to kind of grow through and then remain steady as we have kind of national and EU-wide mandates coming into effect. There's a correspondingly smaller share of DA spending, but there's a bigger section of spending here that's kind of the light gray color that our analysts for this report put under the category of EV integration. But I think also includes a good amount of the intermittent renewable integration work that is underway in Europe. Renewables are obviously a bigger problem in Europe than they are in the U.S. at present. Here's Europe's AMI rollout landscape. I wanted to throw this out to you guys because we got to remember that there are relatively few countries that have done full-scale deployments. Italy's an L with some technology they got from Echelon, a San Jose company. We've got Sweden that's pretty much getting close to full rollout. But we've got a lot of big meter contracts awaiting in France, in Spain, in the United Kingdom, pending some complicated decision-making that those countries and their kind of core utilities are making. And we've also got a lot of countries, particularly in Northern Europe, that fall under the kind of dynamic utilities rubric in GTM's report, which means they're deregulated or competitive energy markets, and the strategy for rolling out smart meters, quote-unquote, versus the sets of technology that are required to allow customers to theoretically switch power providers every 30 days or so is a lot more complicated. And then, of course, here's the depressing news for Europe, which is that they are not in the greatest financial shape right now, and that is indeed affecting spending plans for some of the big utilities here. Vattenfall in Sweden, Iberdrola in Spain, Enel in Italy, E.ON largely in Germany. You can see some big downward revisions in their investment plans over the course of the coming years. And here's a brief recap from our GTM Research report on Asia's smart grid markets. We've got 3 countries here. South Korea is a really interesting country with some world-class information, and communications infrastructure, dense urban environments that are well suited to interesting type smart city projects. And there's really a lot of interesting work going on there. I need to get my editor to write me a plane ticket to go out there. Japan, also a pretty enormous market and growing. I've already mentioned Japan's very efficient grid infrastructure, but after, of course, the tsunami and Fukushima nuclear power plant disaster, Japan is facing a fairly immense pressure, having shut down its nuclear generation capacity, to manage the power shortages that are bound to come. And there's some really interesting smart city whole system integration energy management projects going on there as well. And then, of course, there's China, which everyone knows is going to be the 10 zillion ton gorilla of the global smart grid market. It's got a huge set of heavy-duty transmission and renewable integration plans underway, big EV charging projects, some big grid storage battery projects, and as people who work in China's market say, a pilot is a million customers in China. So the smart meter projects that are going out, though a small share of what we are bound to see so far, are pretty sizable. And then a brief moment to acknowledge the rest of the Earth here. We've got a lot of work going on in Brazil, though Brazil had a mandate that changed a little bit. They're going to make every new residence and business have a smart meter. Now they're just doing it for new businesses and those that want it. So it's a little bit different. And India is really interesting to me, this fascinating combo of world-class IT and systems integration companies like Infosys and Wipro and others, combined with a really rickety grid that only delivers power to, I think, roughly half the population today, and with more or less daily power outages, as well as some well-known, pan-national power outages that have put some serious power constraints on the country's future, and forced a lot of folks out there to rely on their own power, which is interesting. Similar stuff is going on in South Africa, where the country has actually been facing some severe power crises and has called on Converge, the demand response company that was taken private last year after a not-so-stellar performance. They've got this interesting project where they're building basically a demand response kind of market integration platform for South Africa's main utility, Eskom. And it's a really interesting, I guess, example of the potential for greenfield technology developments, that were kind of mastered in other countries to move in and shape the futures of entire, developing nations' smart grid efforts, possibly. All right. So, as I mentioned, GTM Research has been doing a lot of targeted research offerings aimed at breaking out smart grid by different sectors. And this is just a couple samples. This is kind of where I plug our research, which I feel confident doing since I steal data from it all the time. Soft grid data analytics, we're looking at a broad range of analytics investments to top $20 billion by 2020. We'll get into that more later. On the more traditional scale, we've got a sector reports like our distribution automation report, which takes a whole range of technologies that apply to distribution grid improvements, lumps them together, and then really categorizes them pretty neatly to try to make sense of the whole system. And then we've got these kind of pinpoint market reports like our analyst Ben Kellison's new transformer monitoring report, which gets pretty deep in the weeds for a relatively small and specifically defined market. You know, just 112 million to 755 million in 2020. It's not huge, but it's pretty important. And we're going to have a lot more of these tightly focused reports coming out in the months ahead. So, getting back to the big picture. This is a slide from our recent Network Grid event, which tries to lay out what we call smart grid adoption zones. What we're looking at here is the x-axis, right, the longitudinal axis, is the rate of adoption of various technologies, while the y-axis is a measure of the business benefit to be derived from the technologies in question. If we move on to the next slide, we have our estimation of various smart grid systems and how they're tracking to their potential, their business benefit potential across these zones. And the bright orange spot there is AMI, the hardware side of meters. And as you can see, GTM Research believes that AMI's adoption has sort of outpaced its realized business benefit so far, to use utilities that have deployed it. But we're seeing some more benefits at relatively lower rates of adoption for technologies like SCADA, outage management system improvements, distribution automation, transmission wide area controls and applications, and the like. We've got some not so well performing systems. Customer products, that's the big blue bubble at the bottom of the graph. You know, I think we're waiting for the customer market to emerge here. On the other hand, we've got these green bubbles, which represent, meter data management and data analytics, pure software plays, and we're seeing some business benefits here that more or less exceed, the scope of deployment so far. Yep, and here's some more key points from our 2013 forecast. First of all, we do want to remind folks, as I've been getting reminded by various vendors who work in specific geographic areas, that we really got to build out smart grid business cases for the geographies in question. For example, some utilities really don't have a demand response problem, a peak power problem. Others do. Some utilities have far more challenging non-technical loss issues. By that means theft, energy theft or misappropriation, let's say, non-technical losses. And those can range from about 2% in some U.S. jurisdictions to, I've been told, as high as 30% in places like BC Hydro in British Columbia, where I've been told that utility workers can be bribed to steal a transformer off the lot and go install it for a pot grower to grow his or her pot, which is interesting. And of course, the next point on the chart is the matter of moving from kind of the first stage of AMI metering programs to a next stage where the AMI can serve as a foundation for multiple technologies and operations groups. We're going to get into that a lot more later. The final point is obviously that the more cross-departmental benefits you can find that support the business case for smart grid, the more the smart grid is going to be worth, I suppose, and the more excited you're going to get all the various parties within the utility enterprise and the regulatory structures that watch them to get involved and get supportive of it. So here is our smart metering evolution arrow, I suppose, and it's useful to take a look at this to remind ourselves that that smart meters that we've been hearing about for the last 4 or 5 years don't exist in a vacuum. I kind of thought they did when I started covering this stuff in depth in 2008, but we have some important distinctions to be made here, and obviously AMR, which stands for automated meter reading, has been out there for decades, and it has some values for sure. And then we've got early AMI, which is our term for the two-way solid-state communicating meters that everyone thinks of when they say smart meters. And then we've got mature AMI, which is the same meters, and the same networks, but the difference between early and mature is really the difference between meter and meter network and meter data management as standalone system to smart meter, meter network, and meter data management as kind of an integrated part of the utility enterprise as a whole. That's not just the difference either between just pulling billing data from meters and then adding on the other step they can do, like remote disconnect, reconnect, and outage. That's all within the kind of silo of the AMI and MDM. It's really more about sharing data and functionality with other utility systems, with geographical information systems, outage management systems, network operations centers, distribution management systems, volt and VAR control systems, and the like. And that's the point at which interoperability and integration and somehow measuring the quality of that interoperability and integration becomes a pretty important part of the evaluation. There's another way to look at it, basically looking at the leaps between, the changes that occur on the kind of the software side of things as AMI matures. CIS is customer information systems, the basic stuff that handles billing. MDMS adds a lot of more VEE, verification, estimation, and editing, or maybe verification, editing, and estimation, proving out these numbers. And it also adds a lot of the features that are kind of meter specific, like sending pricing signals over the AMI network or sending demand response control systems. But moving to the mature AMI, that's where you get into some of the more challenging things. Asset management, using meter data to try to figure out how your transformers are doing or your conductors are doing, or using the meter data to inform volt VAR or CVR systems of how much wiggle room they've got. Or using smart meters to validate the strength of and quality of your network connections. And these are things where, besides just general complexity, you have a time issue. These are things that need to be faster than the other things, and they also need to be more accurate. So there are kind of qualitative accomplishments, I guess, that need to be made outside of just adding these functionalities, right? And this page I left blank because I didn't have a good slide for it, but I wanted to bring up the example of outage management systems and smart meters that help outage management systems do their thing, because I'm trying to figure out how you assign kind of the responsibility or credit for an effective OMS system to the various pieces of the whole. Right, we've got companies, utilities like PG&E, Baltimore Gas and Electric, that are using smart meters for last gasp outage detection. The meter says, "I'm out," and then it goes quiet because it has no power. And when it turns back on, it says, "I'm back." And that kind of data can help direct crews to fix outages. In some cases, it can allow the utility operators to call someone to say their power's out and we're going to restore you in X minutes before they've had a chance to call in. And that's pretty cool for utilities that usually rely on phone calls to figure out where their outages are. But on the other hand, these meters are also part of an integrated system, which includes an OMS, as well as information for the distribution management system. It's got workforce management dispatch systems, and all these different systems. And trying to clarify just how a utility or an industry creates value for this kind of interdependency. As a reporter, I think it's a really interesting question. I don't have a good answer for it, though, but if you guys do, let me know. As for the communication side of things, we've got a pretty broad view at Greentech Media. Once again, we want to not forget that utilities have been doing things for 100 years or so by fairly traditional methods. Fiber optic, telephone, copper wire still, obviously used all the time. But of course, we do see a pretty big growth path for cellular communications. Of course, that begs the question, what kind of cellular? We've got 2G, 3G, 4G, all, 2G and 3G are in broad use by utilities. I guess I'd be curious to know where 4G might come into play. And of course, we've got all the meter vendors integrating cellular connectivity into their offerings. So, on that matter, I thought I'd bring up some notes I've been getting on the perennial argument between whether or not utilities should install and buy and operate their own radios, or whether they should rely on cellular networks for more stuff. You know, I'm guessing those of you who are in this part of the industry have heard some of the grumblings from companies that do the private radio stuff about cellular making promises it can't keep and stuff like that. This particularly applies to distribution automation, where there are latency requirements and kind of priority network access requirements that might be quite challenging for, you know, some of the older cellular technologies. But part of the research we've done shows that we've got some potential for 4G to surmount some of those issues, if at present for prices that we think are a little bit outside utilities' price range. So we're trying to keep an eye on that. And then, of course, we should remember the issue of licensed spectrum, which still, according to our chart a couple pages back, as you can see, licensed spectrum actually serves more utility needs at present than the unlicensed RF, which serves as the backbone for most of the 900 mesh networking AMI deployments in the U.S. today. So, we do have some interesting kind of political stories to follow on the licensed spectrum front. There is an effort underway at the federal government to link some spectrum for use in a kind of nationwide interoperable public safety network to ride over utility systems and allowing utilities shared access to that. But once again, that's where we start talking about politics rather than technology, and at that point, I think we have to spend some time to see how things shake out. I wanted to throw this slide up here too, although I noticed that I spelled my acronym wrong. That's supposed to say NMS, so let's just ignore that. Network Management Systems. The point here is that we've got all this communications technology on the list above, and we've got to really find some way to get all these systems to work nicely together if we're going to get that extra value of, you know, integration and interoperability out of them. And we've got a pretty bang-up research analyst, Emma Rich, senior smart grid analyst, who's done a great job covering the emergence of various network management system offerings to manage this utility comms tangle. Telcordia Ericsson, we've got Grid Maven Utility Solutions, a subsidiary of SK Telecom that's particularly targeting utilities that it says have deployed AMI and are trying to get the maximum realizable benefit out of them. And we've got an interesting startup out of San Diego called Proximetry, implementing its NMS with partners like Cisco and Siemens, among others. I think the idea of an NMS makes perfect sense to me, but I lack the experience that folks who probably, who have been in the telecommunications industry for years or decades would have on how this kind of network management kind of concept has played out in the telecom sector and how that informs the utility sector. So that's always something I'm interested in learning more about. All right, moving on to distribution automation, all the technologies that go into the distribution portion of the grid. Once again, the first thing I'd say about distribution automation is that it's been around for a lot longer than the last 5 years. We've really, it's kind of a evolving, controls paradigm in the utility business, and I think that the main innovations here are moving some of the, control technology down from the transmission and kind of high-end substation where they've been around for decades into the distribution grid. And one of the factors we've seen here in this kind of convergence onto the distribution grid, both from above and from below, is what we're calling vendor creep. We've just got a huge amount of players here with overlapping solutions in this space. We've got metering vendors like Itron, Echelon, Elster, Silver Spring, who are expanding, that core metering functionality into realms like volt-var optimization, right? Or delivering information for, fault location. Then we've got big IT players, like SAP, Oracle, reaching down from their perch in the kind of big data analytics field to pull data out of utility systems and try to monitor the asset health of transformers and the like. And you know, we've also got some companies here that kind of break the mold. Up in the upper right corner, you'll see Petra Solar, which is a New Jersey company that puts solar panels on utility poles and connects them to their smart inverters, which kind of perform various functions to smooth that, you know, power input onto the grid. At some point, you wonder if that's a solar panel with a smart inverter attached, or a grid control smart inverter with a solar panel attached. You know, you can think of it either way. So it gets real confusing. And then, of course, we've got some hardcore math and modeling going on from some of the folks on this list, like Gradient, which is once again too complicated for me to understand entirely, but pretty cool looking. Here is a chart that specifically deals with transformer monitoring, but which was useful in laying out some of the acquisitions that have been a pretty key factor in the distribution automation landscape. And once again, we've got some cross-cutting kind of functionalities here. For example, Siemens bought meter data management vendor eMeter in late 2011, but has since kind of brought in eMeter's analytics and endpoint management architecture into Siemens' broader concept for how to integrate smart grid from, you know, distributed resources all the way up to, you know, grid, regional grid operations and market management. So that's kind of getting into a DA space. Siemens also bought RuggedCom, by the way, which provides comms into the DA area substations. ABB bought Tropos Networks. That was a Muni Wi-Fi provider that shifted into smart grid, high-speed, high-bandwidth kind of field area networking, and they just turned on Silicon Valley Power's free public Wi-Fi based on their AMI network this morning, I think. So it's kind of a first, you know, using the smart meter network to roll out Wi-Fi. It's kind of neat. And recently we saw an interesting acquisition, Current, formerly Current Group, which is a company that used to do broadband over power line, which didn't work out very well for utilities trying to sell, you know, like TV to their customers back in the early part of last decade. They branched into a whole bunch of different grid technologies, including a set of technologies that fall under the rubric of Prime standard that's now become a kind of key standard for Spanish utility Iberdrola in rolling out their power line carrier-enabled smart meter deployment. And they just got bought by a Spanish company called Ormazabal, accent on the third syllable. Thank you. This is a Spanish company that's kind of an equivalent of S&C Electric in the United States in terms of European protection switching systems. So, and of course, we've got a lot more partnerships and acquisitions on that chart, but the landscape is getting pretty complicated. All right, and oh man, here's a long list of all the vendors who do different things for distribution automation. I think I better not spend too much time on this right now because I think I'm running a little bit short. But let's just say that we do have a ton of vendors with very specialized applications and functions, in this case in the transformer monitoring sector. And analysts like Ben Kellison have a job I don't envy, which is actually rating all these guys and comparing them and giving a ranking of how well they do against one another. So, yeoman's work. I wouldn't want to do it, but I like being able to work with it. All right. So, I think that at this time I'd like to step back and just take us back up to the high-level view to talk about Smart Grid 2.0. Smart Grid 2.0. Basically, this is everything. One way to think of it is perhaps everything that utility hasn't yet made a priority for their smart grid deployments, but which they're really hoping their smart grid deployments can help support at some point. We got renewable intermittent energy, wind and solar. We got home and building energy management, electric vehicles, microgrids, distributed energy storage, ancillary services and the like, and new energy ecosystems to manage this all. And here are some of the graphs I like to use to demonstrate the complexity of this stuff that Smart Grid 2.0 wants to manage. Here's a graph of some wind out of the Tehachapi Mountain Range in California, and you can see the high level of variability there. Southern California Edison is building a 32 megawatt lithium-ion battery out in the Tehachapis to try to manage this stuff. I'm curious if there are ways to manage fluctuations like these without big storage systems, but that might get pretty complicated. Here's a similar graph for solar power. These are 10-second changes in the output of a set of panels in Arizona based on a partly cloudy day, basically. And so we got some challenges here. Obviously, the bell curve still exists, right? But the fluctuations are pretty severe. And there are interesting technologies out there to work on this. In Germany, which has a ton of solar panels and solar power, we've seen inverters subject to regulations that require them to do things like, for example, don't all shut off at the exact same point, trigger point for frequency fluctuations on the grid, right? A minor blip on the grid could turn into a major disaster if every single inverter clipped off for grid safety all at once. So you got to randomize that thing. You got to put in ramp up and ramp down and low voltage ride-through features. Things like this, which actually aren't technically allowed in the U.S. today under IEC standards, but which are being worked on, so you can incorporate some of that functionality into U.S. deployments. Here's a quick chart showing that electric vehicles indeed do add a big amount of power load to a typical home, particularly in this case for PG&E average homes in San Francisco and Berkeley, which are probably the most likely ones to have an EV in the garage. And as we were talking about earlier before the panel, you can run into pretty serious problems with overloaded transformers with only a few cars plugged in on the block, and then other blocks will have no problem at all. It kind of depends on the individual setup of that circuit, right? So that could be a problem, and it doesn't have to be a problem that only comes when everyone buys an EV. It can come very quickly. And I would suppose for PG&E it's particularly challenging when everyone's going out and souping up their Priuses to get plugged in and aren't even telling the utility about it. So, and I had to throw in the McKinsey curve just to remind myself here that every single thing I talked about, solar power, wind power, electric vehicles, fit into a tiny little slot on this enormous graph representing the entire range of possible investments into energy efficiency and renewable energy and their relative bang for the buck, so to speak, in terms of carbon and greenhouse gas abatement, right? Because utilities don't need to just figure out how well these individual systems work. They really ought to be thinking about how well they all work in relation to one another and whether we couldn't spend the money more effectively somewhere else. I bring up the point because it kind of blows my mind to think about how complex that task is, which I think leads us hopefully fairly naturally into the next point, which is what we at Greentech Media like to call the soft grid. What's that?
The last slide.
The last slide?
You said you're just talking about a very small sliver.
Oh, yeah. No, I was saying that each of these little columns represents one of these. For example, I know that onshore wind, high penetration is in there, for example. I know that solar power, both CHP and PV at distributed and centralized scale, occupy little sections of this graph. And according to McKinsey, each has a specific kind of bang for the buck in GHG abatement as compared to all the rest. And I think what I was trying to say is, when I think about the complexity of what utilities have to figure out, they got to figure out not only how these individual systems work in relation to their optimum efficacy, they also have to figure out their relative value as compared to everything else you can choose from. So that was what I think I was trying to say. Yeah, thanks. So we need software to solve all these problems. And this is where my expertise begins to give way, and I readily invite all participating folks to chime in the Q&A section about just what software we need to help out. But really, we've got software ranging from legacy CIS SCADA systems to the share of software that goes into standard AMI and DA deployments. And then, of course, we've got a whole new class of IT expertise being applied to managing the flood of data coming in from these devices, architecting them to work nicely with one another, and the like. This is our utility soft grid spending report from Greentech Media. We're projecting a fairly steady growth, topping out at just over $1.8 billion in the U.S. Into 2015, with the majority going into grid operations and business services. To break down some of the stages that I like to think about when I think about soft grid and its complexity, one of the first things is thinking through architectures. This is a chart of an out-of-control ad hoc integration that one of our analysts put together, trying to warn folks about what can happen if you try to link individual utility systems to one another via one-off kind of application programming interfaces and the like, and how it can get really complex, overly complex very quickly. So there are some alternative ways to approach that, which include multi-tier architectures, helper applications for legacy systems, agent-based architecture for devices that are distributed and need to be able to do things on their own or in concert with one another, and then service-oriented architectures that encapsulate application functions, into modular components and kind of reuse them. Once again, these are terms that, as an English major, I am not familiar with in their everyday execution, but because my analysts know a lot more about this stuff than I do, I really try to ask folks if they're utilizing any of these concepts in the way they're devising their smart grid architectures, and I found them useful for that reason. And I must admit that this federated bus architecture that our analysts came up with sure looks a lot cleaner than that last graph with all the cross-cutting applications. I use this information mainly to try to help guide me in thinking through just what kind of integration challenges utilities are facing here, and to ask people to help me get educated on the issues at hand. And then, of course, I would be remiss not to say the words big data, at least, because it is the term du jour for the smart grid today. We do have a list of some of the functions that could fall under the rubric of big data. Making sure that data is managed in a way so that there's one key point of responsibility for it. Don't have duplicated data. Make sure that you're storing it properly, and we've got some companies that are specialists in this for utilities like OSI Soft. Simulation engines, data stream analysis become particularly useful and necessary when modeling, grid operations and doing grid analytics. And then, of course, the collaboration, sharing, visualization, and business intelligence aspects are pretty critical for deriving business value out of all these technologies and letting the folks who make business decisions know what data they're looking at and what it means. Here's a quick list of some leading vendors in data analytics, and obviously we've got a pretty wide selection, both folks coming at it, from a pretty well-established leadership position, as well as all these interesting new analytics companies with different names, they're clever names and stuff like that, and I could talk to them for an hour or two and still not understand what they're doing exactly, but I know that they're going to start doing it for smart grid, so I can't wait to find out how that works. And then, of course, we've got a lot of companies that are specifically focused on the soft grid, that is, serving utilities, serving grid functions. C3, just down the road from here, is a very interesting company with energy efficiency efforts and now expanding for the first time into some smart grid functions. EcoFactor, a neat company that takes thermostat data and crunches it for efficiency. AutoGrid, which is tying together disparate systems and letting the utilities kind of manage them all at once. And then, of course, we've got a couple acquisitions, including eMeter, bought by Siemens, DataRaker, acquired by Oracle, indicating that there's quite a bit of room for acquisitions here. And here are basically some of the things that utilities want to actually do with data. They want to figure out when transformers are going to fail, hopefully before they actually fail. They want to protect their revenue. They want to catch thieves. They want to figure out where line losses are above acceptable norms and try to figure out which investments they need to make to fix that. They need to be able to look at everything on a map. That's pretty simple. They need to, and I forgot that, they need to be able to look at everything in terms of a timestamp that's pretty accurate. And that's also, both geospatial and, temporal, I guess, databases are interesting kind of subsets of this. They need to be able to model and then predict, the optimal way to run the grid for VVO, CVR projects. They even need to be able to analyze the way customers from big businesses to individual homeowners are going to react to various different signals and incentives to save energy, and then try to plot that information and knowledge into their future iterations of demand response programs, efficiency programs, and the like. So here's a quick breakdown of what we see as year-to-year spending on smart grid analytics specifically. Just to let you know, it's mostly the U.S. today, but a growing share for Europe and Asia Pacific, as well as some growth in Latin America as well. And here's a real interesting number from our Greentech GTM Research folks on the return on investment on analytics. And I found this really interesting. I did not look up how he did this math, but I think it kind of makes sense. Basically, the longer you put money into this, the greater the returns become. And that's because I think one of the magic things about big data analysis and the idea of bringing in data is that you don't know what you don't know. The data analysis helps you find out the questions you didn't know to ask, and all of this somehow, this body of kind of big data knowledge just builds and starts suggesting new and better ways to further optimize things. I wouldn't take that sentence I just said to the bank or ask anyone to give me a lot of money for it, but it seems to make sense to me. And once again, I figure that the folks on this call might have a lot of thoughts for me about whether ROI multiples like this make sense and where they see the opportunities for kind of some greater than the whole of the parts returns on this kind of work.
Analytics in grid space, or just?
Yeah, this is specifically for analytics in the grid space, focused on the three core kind of categories of. Oh man, where'd that go? The three core categories of grid operations, customer engagement, and business services. So it's a little bit more expansive than just the benefits to be derived from improved grid operations. It could also be the benefits to be derived from improved business operations. It could be the benefits to be derived from better customer engagement. For retail electricity providers, obviously that's customer engagement and retention, which is a whole different metric than for monopoly utilities who pretty much you're stuck with them. So. And I know that we're pretty short on time, so I just wanted to leave you all with one last page, and that is the top values for analytics here. Pretty clearly, this is based on survey results from utilities we talked to. Ease of data integration is kind of the top overall category. We've heard a lot of people say that this data coming in from just smart meters is really overwhelming, and utilities are struggling to manage it. But I wanted to point out security there. Security is actually a top highest concern for utilities than even, easing data integration. And I found that really interesting. I'm trying to figure out how analytics plays into smart grid security. And that's where I really get into areas where I am over my head in terms of technical expertise, because smart grid cybersecurity is very complicated. And as a reporter, I must admit, I can't get a lot of people to talk frankly about all the smart grid security breaches they've had to overcome or been affected by in the past. So I understand that part of being a good cybersecurity provider is that you don't give away your secrets. But we really do see this at Greentech Media as a really important consideration for 2013. I don't know if it falls into the category of kind of a hurdle which individual smart grid vendors or utility projects need to get over to even be permitted to continue to exist. I seriously doubt that. But I think that with the Obama administration directive on cybersecurity information sharing amongst federal agencies that came out earlier this month, and with a lot of reports of interesting and troubling hacks of legacy SCADA gear and some of the AMI intrusion that we've seen reported out there, that this is going to become a really important problem to address. And so perhaps as a provocative end note, I would like to say that securing the grid analytics, we're going to have to think very hard about that.
All right, thank you very much. Do you have a slide which has your information on it?
Yes, I do. Thank you. That's probably a better one to leave than the cybersecurity one.
Very good. So at this time, what I'd like to do is ask people online to post their questions in the chat window, and we will also have a round here in the room. Let me start while people are thinking. One of the assertions I made in my opening remarks was that I'm not seeing the private sector really picking up on this subject in a big way. The billions that you talk about, when spread out over the population of just United States, looks like small change to me compared to other industries where massive amounts of money are being spent on things that, to me, in terms of criticality, don't seem even half as important as the electric grid. And the reason why I say that is we live in a highly industrialized society where the electricity is like the oxygen for keeping the economy going. And yet, we seem to be, it reminds me of, from my childhood, of watching that Peter Pan commercial with Captain Hook and how he made people walk on the plank, and there were little alligators at the bottom waiting for those poor little victims to be eaten with. And when I see us moving from a centralized architecture for power, where we had a lot of reserve spin, where for many, many hours of the day we had excess power compared to what was needed. So we're moving from that paradigm to this paradigm where it's distributed energy resources. A lot of those resources are not going to be controlled by the utilities that we know today. There are going to be a lot of independent power producers that are going to be coming in and offering this energy. There's going to be a market, a more, I would say, democratic market, and it'll move down from the regional level to the area level, down to even substation level, where trading can occur in the future at smaller and smaller scale. What is the backup plan for this? I mean, you show solar and wind being all intermittent, and the capacity that you would need to fill those gaps far exceeds any storage kind of thing that we're thinking about.
Right.
So then there's this concept of, well, we'll do demand response and we're going to tailor the load to meet the supply. You can make some adjustments there, but my concern is that with such limited investment in research and development, and so much money being spent on demonstration of things that already exist, I don't see a through street yet. And I'm putting on my R&D hat, and I've worked in other industries in R&D, and we were planning 20, 30 years ahead for things. My concern is too little in terms of investment in R&D, and not enough conversion of that R&D into capitalization in the commercial market. So while the numbers look nice and big, but when you put it relative to other things that are going on in the electric sector as well as the size of this country, it looks small. So share with me your thoughts.
I guess, well, specifically on the matter of intermittent renewable resources, I guess this kind of simplistic way I think of it is, how do you pay today for a problem that's not going to happen until tomorrow or next year or 5 years from now? You know, how do you justify paying for integrating and smoothing intermittent renewables when they're not yet a problem for you? I don't know the answer to that question exactly, because baseload power in the U.S. is still pretty cheap. you know, people, you know, people who aren't fans of green energy complain about the obviously the incentives that, you know, solar and wind receive, but you know, they don't obviously complain about the missing disincentives for, you know, using this fossil fuel that's going to cause us so many problems. Maybe that's one kind of simple answer, is that if the price of carbon was reflected in grid power, then maybe these technologies would be relatively more valuable and thus worthwhile and more investment. You know what I mean? But I don't know. You know, to my mind, it seems that most of the renewable energy has been pushed out by this combination of regulatory mandate and government incentives, and so I don't know how you true that up to the imperatives of what we're going to face tomorrow. I have no idea, though.
So the challenge that we're facing is that we have deregulation, but it hasn't gone through its full course yet. So we're experiencing some growing pains of moving from a highly regulated industry to a deregulated industry without getting the benefit of either extreme. Because if we had a monopolistic system, you had very few people who were accountable, and they had the pocket, the checkbook to write to buy stuff. We're moving away from that into a deregulated side, but we haven't reached such a level of deregulation in order for brand protection to become a reason to make investments. Because there's still service territories and areas that a utility person can say, well, this is our territory. Yes, granted, transmission has been taken away from us, and maybe some other service, but distribution is ours. Or the transmission guy will say, well, transmission is ours. But imagine a future in which the suppliers and the distributors could be multiple entities. And this is what happens with automobile industry. This is what happens with gaming industry, where the competition drives investment in R&D and all those things to stay ahead of the competition. So while there is some competition, but it seems to be focused a lot on the vendor community and not enough in the people who are actually delivering the electricity for us to make the value proposition to them that, look, XYZ utility, if you make this much investment, this is the improvement it will have on your reliability, and this is how much your financial risk will come down as a result of that investment, and therefore it's a good thing for you to do. Mm-hmm. It seems like the economic argument that is being made, and being made quite unsuccessfully to the CFOs of utilities with smart grid, is where is the return? Where is the return?
There is not much return compared to other industries.
So, yeah, so the point was being made that maybe there isn't that much return. I beg to differ, because the path we are taking towards distributed energy resources will question our reliability of the grid in the future unless massive amounts of investments are made in R&D to come up with a technology we don't have today that can deal with the complexity that Jeff has just described. You know, when he talks about that mature AMI, that mature AMI is a many-body problem. Mm-hmm. And it's not going to be one vendor who's going to solve that. Many vendors with years and years of investment in R&D will solve this nonlinear control theory problem. And while there are some vendors who are doing great jobs and coming up with very innovative things, but its impact is not having the impact on the entire system. So here we are moving from centralized to distributed, making our reserve margins very razor thin, and not having a backup plan through intelligent systems to the level that we need, because there isn't enough investment in R&D to come up with that next generation of technologies. Andrew.
Jeff already mentioned the issue about security and the reasons why it's a little difficult to get some of the information because it's part of the whole system to protect the grid and all the rest. There's a certain level of non-transparency in the system. It's controlled by utilities, and as a result, it seems like until you have a greater level of big data out there and analytics to actually justify what you're saying and show the returns, it's kind of a which comes first. It's kind of a difficult issue to solve.
Right. The business model, by the way, that we're moving towards will make such data more and more available, not less. And the reason is because increasingly that data is going to come from entities besides utilities. There are going to be a lot of IPPs involved, a lot of aggregators involved who are going to be putting this data out.
Sure.
Because they're going to monetize that data. Independent power producers.
Yeah.
We have some questions online we'll take, and then we'll come back to the room. So the slides are going to be shared with all the people who are attending today, as well as the people who are online, so fear not. And we had some technical issues of audio feed for a while. Then they didn't see some slides, but then they started seeing them. Okay, let's take this question from Bob Lefebvre, who asks, do you see a role for diverse suppliers in the smart grid space? These are typically non-public, women, minority, veteran-owned businesses. California PUC is very interested in this area.
Yeah, thanks, Bob. This is Jeff. I saw that question, and I was worried about it because I don't know the answer, to be quite honest with you. But it's worth looking into. As a matter of fact, hey, if you want to email me the CPUC stuff on the matter, I would love to check it out. I would just imagine, based on my past experience, that you know, government entities would be the place to look for folks in those categories working on issues like that.
And just in California, the EPIC program that is being looked at now for investment for the next 8 to 10 years is strongly recommending, you know, organizations like these, like minority business, to get in, make proposals. And I think, at least for the California market, for the next 8 to 10 years, that EPIC program is going to represent a significant portion of the R&D money that will be spent. And that money could, a lot of it, by the way, is for demonstration. But there is about 20% of it for R&D. And that could very well be kind of like the angel investment that some cutting-edge technologies need to get into the space. Okay, we have a question from Osamu.
Yes, so I guess it's partly comment, partly question. So three. One is what you said about the smart grid is, I think, a very point on. I think it's what the regulatory thing is going to be the big push about smart grid, especially in U.S. California definitely is going full ahead with smart grid, mainly because of its 33% RPS goals, etc. But if the middle of the U.S. doesn't do anything in terms of our renewable energy goals, etc., you can have an old grid as it is, cheap electricity, no problem. You don't need a smart grid. So you know, unless there's some kind of regulatory push or market change, etc., you know, smart grid markets may not be realized in some parts of the country. So it will be a very, very diverse market, as I see it.
I agree.
From that point of view, I had 3 questions and comments. First is, in terms of the smart meter deployment slide that you had, it seems low compared to what I had envisioned, because according to IEE, I think Edison Institute, I think it is, they said 50% smart meter deployment by 2015, and your slides seem to be considerably lower than that.
The map slide?
Yeah, the map slide, yeah.
Oh, yeah, that's because most of those meters in really populous states. California and Texas, I think, together account for more than half of AMI in the US.
So probably maybe it's just because of the population density. So if you add the east and the west and that and multiply, then you get 50% of all of the smart meters, maybe.
And if we had a map that was sized by population, it would look a lot better.
Yeah, if you look at the Electoral College, also represented by those states, it'll be more than half of the electoral.
Sorry. And then second issue is data analytics. You said 20.6 billion US dollars is the expected market. Do you think the PUC in each of the states will say yes to all of these proposals by utilities? Who will pay for this?
Right.
0.6 billion.
That's a good question. One of the interesting things that I've been talking to data analytics providers and vendors about is this early stage proof of concept deployment cycle they've gone through with utilities, where part of the premise was to go out, examine a bunch of different value propositions for deploying analytics, test them out, and then essentially go back to the utility and say, here's what our technology has figured out about what makes sense in terms of you buying our technology and doing something with it.
Okay.
And part of that is that regulators are indeed becoming far, I think, they're putting more and more scrutiny on the details of these business cases. There's actually an article out from the Wall Street Journal this morning, I think, that mentioned the increasing scrutiny and reduction in kind of overall, rate of return that utilities are seeing in their most recent rate cases. And in a funny way, the ability to analyze data and come up with some kind of acceptable, kind of verified, standard format way to value your smart grid deployment options, in a way, I guess it would make sense that it's easier to justify to regulators the cost of something that's gone through that analysis than just saying, here's a great project and the federal government's going to pay for half of it, so why don't we do it? Or now that the federal government's gone, here's a great project, but we don't really know how it compares to the other projects we could choose from.
So your sense is that because data analytic firms have become much more better at making the business case, they will be able to get $20.6 billion US from the PUC. To get those rate cases through. Because
I think that's what we're claiming there, yeah.
Third is also, I guess, this is more to my kind of more of a comment, but I was looking at the Smart Grid 2.0 drivers,
right.
Renewable energy, home energy management system, etc., microgrids, distributed storage. All of these seem to be premised on some kind of regulatory framework change. Unless there's a big regulatory framework change, I don't see that being necessary. Renewable energy, if there is a mandate like an RPS, yes.
Right.
But otherwise, cheap gas is going to make it, cheap.
Right.
Same with microgrids, home energy management systems, etc. So, if you can change the regulatory framework so that the electricity price will start going up, then, home energy management systems and these things will become a lot more interesting. That's how I saw it. But.
Yes, and I think that makes a lot of sense. There are some cases, I think, in which the regulators are certainly pushing the utilities farther than they want to go in considering some of these things. The CPUC has asked SoCal Edison to find 50 megawatts of energy storage in the LA basin by 2020. I didn't see a megawatt hour figure in that statement either. So what is 50 megawatts of energy storage? I don't know.
50 megawatts of high wheels? 50 megawatts
I don't know.
of high wheels.
I don't know. It's a little bit open right now, and I think that's because public utility commissions wish to push certain, goals, agendas, and the like, but the framework for how we integrate the understanding of how these things fit into the current system is not yet there. I think it is a huge problem. I also think we're seeing a lot of yeoman's work underway on the part of the various national labs and institutions like EPRI to try to assign more specific business values. In the case of energy storage, EPRI's got huge reports with just breaking out every single business case you can apply in different settings and for different kind of applications and setups. So.
I think one of the challenges that we're going to face, at least in North America, is that the bulk sources of energy that we have today, coal and nuclear, they account for about 65 to 70% of the electricity. And as they are being decommissioned because of environmental reason or the whole radioactive waste issue, natural gas and wind power are the two that are disproportionately taking that deficit. But that can only work for about a decade. If you see going beyond the 2020 mark, it becomes a little bit cost prohibitive because the impact that will have on the cost of electricity, and when I say cost of electricity, today the price of natural gas is low. But as the demand for natural gas goes up, there will be no such thing as a North American price for natural gas. It's going to be a global price. And that same American citizen producer of natural gas will suddenly become an international citizen when they find a market where that will take their natural gas for a higher price. So this whole notion about having a domestic indigenous source of energy, in my opinion, is a myth from a financial international monetary perspective. So if you keep that in mind, and if you understand that natural gas plants, while low in capital cost, you know, like when you do dollars per kilowatt and quick ramp up, all of those things are great. But when you find out what the operational cost of a natural gas plant is in terms of fuel cost as a percentage of overall cost, and then you add to it this price volatility that we're planning to see in the future because of the increased demand on natural gas, it is not a reliable source of electricity for the future if you want to keep the cost level or slowly rising. When the percentage is small, you can absorb it in coal and nuclear and other things. But when it starts getting into the high teens and low 20s of the energy mix, that volatility will affect. And because it's a regulated market, utilities could have a very serious financial problem on their hands, much like we saw in California in the early 2000s when the wholesale price of electricity just went up that they were trying to buy, and yet they could only sell it at a certain price because they were regulated. So I don't see that as a through street. It's a temporary measure to figure out what the next bulk source of energy is going to be. And this is why the deregulation is important. I think that having the ability to do microgrids is going to help, because if you have many, many zones of autonomous energy production and balancing, its cumulative effect on the grid will be stabilizing. But when you have individual houses having large variation, and then they include that, what I call perturbation or entropy onto the system, then the poor utility has to figure out how to stabilize it. But if you look at the current regulatory framework in North America, it's not friendly to microgrids at all. At all. In fact, many utilities see it as competition. So something's got to change in the regulatory framework, I'm talking nationally, in order to enable such technologies and create the stabilizer. Now, in addition to that, trading has to occur at a much granular level of energy, literally between microgrids sometimes, so that their dependence on a utility for electricity all the time is brought down. And utilities should be incented to be the wires company and not compete for kilowatt hours. Then you can see a future, or that clean future that you're talking about, that you're...
I agree, although I don't know if you've come up with how that happens, because I think it's a fascinating question.
Well, first we have to visualize it and conceptualize this future that I'm talking about. Because there are two visions. One vision is you create a bulk source of energy like nuclear fission with recycling, reprocessing, or put money into fusion, make that practical. If that's not the path we are going to take, if renewable energy is the direction we want to go in, we can't do it on natural gas. We have to do it by democratizing energy production in this country in a big way. In much the same way, today, a lot of content on the internet is hosted by many, many, many servers sitting in many, many, many places. And that sharing of files and things, if it works like that, why can't it work for energy?
Because when the servers go down, everyone gets upset and then goes on with their lives the next day. When the microgrid internet goes down, the next day, every regulator in the country starts dismantling the system, perhaps.
Right. So there, what I'm suggesting is that the creation of microgrids will pass some of the responsibility on to consumers, and then the utility is helping fill the gaps. And they should be incented. A business model needs to be created that incents them to fill those gaps rather than have to have the millions and millions of kilowatt hours to spread their infrastructure cost on, so that to avoid those surcharges.
Certainly, they don't want to be left with their traditional business model in a world where more and more of their end customers are actually taking more money from the utility than they are paying the utility.
Yes.
As independent power producers with lucrative, incentives for generating solar power that goes back into the grid may well be doing today. So I agree with you there that we need to think of alternative ways. Another way the utilities, some utilities I think have talked about doing it is by owning some of the systems that help that integration process at the endpoints. For example, if the utility could own a piece of that solar inverter, they could use that solar inverter to manage the fluctuations that are cause them temporary stability problems. Maybe they could add an energy storage system that allows them to do something similar, and then I think retain a little bit more control. I guess that's one concept, although I have no idea how today's regulatory framework would allow utilities to take that step past the meter and into individual premises.
Well, I have seen technologies like Transverter and Growing Energy Labs, GELI, G-E-L-I.
Oh, yes.
And the combination of those, GELI has an energy router. The concept of creating real-time balancing in a facility that has some renewable, maybe some storage, and relying on the grid, and in real time trying to balance it and bring that intelligence down to the most granular level. And with some what I would call trainer wheels for 5 to 7 years, I think we can develop ways of becoming more self-sufficient at the edge so that the dependence on the central is less. Otherwise, we are going towards a contradiction. Because on the one hand, we are so gung-ho on decommissioning all these big power plants to reduce the carbon footprint, and yet we don't really have an alternative plan in place, kilowatt for kilowatt. That is what my concern is. And so what we're doing is we're playing with the margins, the reserve spin, if you may, and there'll be a point at which it'll become an unstable situation, which means brownouts and blackouts and things like that, which are not going to be good because then we'll just get used to them because there will be no way out of the situation. Andrew.
Can you just expand a little bit? When you're talking about making things more autonomous, how do you overcome the issue of like rural electrification in which the last mile or rural areas in which there isn't population densities, it's more expensive. So
right. So this is where I'm saying that we're not talking about having all generation sources of all the utilities gone and they'll just become a pure wires company. That's not what I'm suggesting. What I'm saying is that if we're seeing a reduction in the centralized power, maybe that centralized power can still be kept, the remaining centralized power, for situations like the ones you're talking about, and in areas where there is renewable energy, that we should give them full credit and give them economic incentives to not only use it, but create local autonomy and balance. Like this whole idea of community storage and balancing community storage with renewable so that you have zones of autonomy. It's not down at the individual house level. It could be at the housing complex level. And there are many developing countries where they're actually starting to do that, where like Al-Nakhil and others in United Arab Emirates, other big contractors are doing this. They're putting smart meters, they're putting the solar panels, and they're creating a zone, if you may. And Malaga, you know, the city in Spain, and I believe Endesa is doing a project there, making it a smart city. We have that in Taiwan, in Korea, in Japan, where they're testing these areas of zones, let's say, of autonomy. And I think that if we move in that direction, we have hope, because the way I'm seeing it is we've got this, you know, little scarf, the handkerchief on our eyes, and we're hoping for the best, and we continue to walk in that direction where supply is not meeting demand. Demand is going to grow. Demand is going to grow because population is growing and because we're becoming increasingly more electrified, and as we move towards more electronics type societies, we know it's this level is just temporary. Energy use is going to go up. And will continue going up, especially when these underserved people, these 4 billion people, are going to start asking for electricity. And then it's all a network grid. After all, North America, Canada is connected to U.S., is connected to Mexico. If we see a lot of shortfall in Mexico or Canada, it'll affect the U.S. grid. So these are real problems. I'm glad that we're having this discussion. And I'm really glad that questions are coming and people are challenging my notions.
No,
Mike?
I have other questions.
Okay, yes. I want to take these couple of questions before, because we only have a minute left here on the actual clock. But I just want to quickly, this Carol says, what were the most interesting trends topics from the conference? You mentioned them in the presentation, but do you have like 2 or 3 like golden nuggets?
Yeah, I would say pretty much. I mean, one of them was this very early kind of proof of concept, work that I've talked to some of the smart grid analytics firms about, which I think was very interesting. Let me think here. We did have, I think, a lot of talk around the issue of, how we're proving out the quality of the integration work that's gone on so far. Basically, trying to figure out. Well, I guess it gets back to the concept you raised of a microgrid, being the solution to this problem you have. But I guess the question is, at what kind of cost per kilowatt hour equivalent to what the customer would be paying for grid power today versus B, the value of the microgrid stability characteristics in terms of what we might project to be a future kind of instability that we need to solve for.
Right.
A lot of these projects aren't quite ready to, I think, necessarily be valued in a way that reflects their future potential for value in an increasingly complex and hard to manage
So
grid.
coming from a third world country who has seen 6 to 8 hour outages of electricity, I will tell you, once you put in the opportunity cost for lost electricity for 6 hours, all the microgrid economics will work out very nicely. Very nicely. As long as the latte machine is running and you have electricity with 5 nines of reliability, you will not make that economic argument. But the moment the outages begin, trust me.
Or even for a standard average interruption duration index of 200 or odd minutes per customer in the U.S. per year, I guess there's
it's so spread out they don't feel it yet.
Right.
But if that was a monthly thing, then yes. And then just one question online, and then we'll go to the room, and then we'll wrap up. Jeff, where do you think we'll be in terms of progress on Smart Grid 2.0 at the end of 2013? I think your data in the presentation showed it.
It does. Basically, another thing I would add is that we do have some kind of really innovative distributed energy resource management systems or distributed energy resource systems being piloted right now that Kansas City Power and Light has one. They've got all the pieces in place. It's a whole neighborhood with smart meters and home energy networking. It's integrating outside wind, and it's got DA, and it's got fault isolation and service restoration. All they're waiting to do is turn on the battery. They've got a battery. They turned it on, but it's only in on-off mode right now. They haven't got it into load following mode right now. But as projects like that kind of get turned on and we get to see how they operate, I'm really looking forward to that. And the other main trend I guess I'd say would be optimizing AMI and moving from early to mature AMI. We really need to watch that.
Any information on the Russian Federation and smart grid penetration there? 11 time zones, distributed network.
I have no idea. I have no idea whatsoever. That's a real good question.
Great place for microgrids.
Yeah.
Mike, you had a question?
Oh yeah, I was just wondering, I've seen the business model of Smart Grid 1.0, 2.0, 3.0, okay, and you are also proposing a different kind of 1.0, 2.0. I was just wondering about one thing. The Public Utility Commission, okay, so far, based on my limited understanding, they seem to have been fulfilling the role and functions of a labor union. So has there been any discussion about Public Utility Commission 1.0 versus Public Utility Commission 2.0? I mean, 1.0 is really, we barter. We pay 12 cents per kilowatt hour, right? 2.0 is, wait a minute, it should be a democracy and everything should be consumerized. Wait a minute. So what kind of role and functions should the Public Utility Commission continue to take charge? Or Public Utility Commission should be just like the labor union at the time for them has been come and gone?
I don't know. And I was trying to figure out the labor union connection, if they were demanding that any smart grid improvement come along with increased wages for workers. Or
no,
like
labor
that.
union, in this sense, the labor union has been trying to advocate for the laborers to get more benefits, right? More evenly distributed benefits and resources. Right? I mean, Public Utility Commission has been playing that role.
Right.
I mean,
protecting the consumer, perhaps.
Right,
yeah.
but I mean, moving forward, we're consumers.
Right.
I mean,
well, not yet, though.
I mean, smart grid 2.0 means, in your definition, that we should be prosumers, right? And at that time, wait a minute, what are you trying to protect me from what? Right? Are you in the way for, inhibiting me doing more business?
Yeah, well, I don't know. Electricity is so different from so many other things we buy and sell, and that it really is.
But I cannot live without electricity.
Yeah, exactly. You can't live without it. So first, make sure it stays on. And I agree that the PUCs probably could stand to do with some modernization, perhaps in the way they evaluate these various projects.
I would hope GTM would take the lead and start really asking the question. I mean, should we have, right now, we understand, right now it's a PUC 1.0, right? Whatever it is.
Question, and I think it is worth checking in with the groups like NARUC, the National Association of Regulatory Utility Commissions, to see how they consider their responsibility to modernize, to manage the smart grid.
Meaning, publicize your job description, say 10 years or 20 years from today.
Yeah. So just a quick point on 1.0, 2.0, living in the Silicon Valley and knowing that vernacular very well over the years. These 1.0, 2.0s are a very good way of maintaining job security because you always create sequels and sequels of sequels, so people are always anticipating the next version. But reality doesn't work in these quantum states. And being a physicist and knowing a little bit about quantum mechanics, I can tell you that the electric grid is an analog. It's not a digital, even though it's using digital technology, but it's a continual phenomena of improvement. And it's happening at the very, very minute level, the granular level with sensors, network sensors, then using the data to control systems, and then managing multiple systems. And constantly ask anyone from ABB, Ariva, Siemens, SNC, they're constantly trying to improve their technologies. So it's nice, it's a good business model, it's good semantics to wrap yourself around and seek for additional funding every time you go to a big number like 3.0 or 4.0. But I think it also does a disservice for what's happening in between those versions. And so what I'd like to do is just give Osamu you wanted to ask something?
I think California Public Utility Commission is doing a very good job, I think, in a very difficult situation where a lot of things are changing, and they are actually doing quite progressive, like, for example, the 50 megawatt storage. I think, if their only job was to keep the lights on and protect the consumer, they would not do that. But they have a lot of other things, like the 33% RPS, etc., that it is trying to achieve at the same time. So I think they are doing a lot of experimenting as well. Of course, one can always criticize for things, but I think they are doing a good job.
One question from online and some wrapping comments, not comments in which I'm going to wrap, but wrapping comments, and then we will bring this conference to a close. The question is, how do you see the availability of CCA affecting the grid economics? This is from Carol.
What's CCA?
What is CCA?
Community choice aggregation.
Oh, you mean like
Marin
County and stuff like that?
Yeah, Sonoma, and
Sonoma, etc.
Even San Francisco, city of San Francisco did that.
Well, I know that PG&E doesn't like it. I have been confused by the idea of a town or a county that names itself an independent entity and then gets to kind of do the fun part of managing electricity, which is selling the power, while leaving the responsibility of keeping the wires maintained up to someone else. I know it's not as simple as that. And I am interested in how kind of, I don't know if they're regulatory, quasi-regulatory, regulatory/business/governmental kind of institutions like this might serve an analogous function to a microgrid function, because they can actually kind of, I guess, seek to attain a better balance of the local appetite for renewable energy with the local ability to kind of manage it.
Yeah.
I
so
don't know.
Here is an example where the regulatory environment has not kept pace with what the business drivers are. So the CCA concept is a good one. It's creating a sense of responsibility that we want to produce our energy and use it. Great. But the regulatory framework makes an organization like PG&E feel uncomfortable because it's taking away their kilowatt hours, which will affect their revenue collection. So in this kind of situation, and this is what I was talking about a little earlier, that we need to move to a direction where utilities will be seen like law enforcement or fire brigade companies or things that are needed in certain times. And they need to create a proper business model for them so that they're not measured by kilowatt hours that they've sold. If that is the case, then distributed energy resources is not going to be a sustainable way of producing electricity. Something's got to give. And that's basically our conclusion today, is that innovation should not become obsolete just because smart meters have been deployed. This is just the beginning. We're still on the beach. And I'm not saying this for the job security of the people in the room or anyone in the audience. This is something serious, that if availability of electricity is going to affect our quality of life and the productivity of our society, we need to take it a lot more seriously than we are now. And the investments that we're making at the national level are peanuts compared to what we have done for a lot of systems that are sitting idle in this country with our tax money. I'm not going to get into those verticals and tell you which verticals I'm talking about. But having said that, I feel that we have the potential to educate our graduates who are coming out of colleges with a variety of degrees, whether it's engineering, math, English, music, to get into this business and create the proper incentives for them to be creative in this industry. And then the social networking and gaming types of movements need to be connected to energy somehow. We can't use this argument where electricity is 6 to 10% of the median income, so most Americans ignore it. No, we need to connect it with the concept of sustainability of the planet. We need to do our proper fair share as an industrialized society on this planet. 5% of the population consuming 50% of the resources. We carry a big burden, and we're not carrying that burden when it comes to energy. So my recommendation to all of you is, as Jesse Jackson would say, keep hope alive. Continue to innovate in your respective domains. Please do. Don't stop. Don't think, oh, well, Jeff said it's only 20 billion. I'm not going to get any of it, so forget it. I'll go into some other vertical. Stay in this business. And we've lost a lot of people in the last 4 years. My forums used to be packed with people. Now I have to write individual emails to invite people many times. So I know that there has been a change. And the change is because there isn't that much money in the market to keep people vested. So with that, I will now bring this event to a close. Our next event is going to be on April 2nd in Pleasanton, California at TUV Rhineland. And they're going to offer us a free lunch and a tour of their lab. And there's going to be talk about testing and certification and the maturity of that for home area network type protocols. And then there's going to be also a presentation by the SunSpec Alliance that's going to talk about the securitization of solar assets, because that is a big issue with all the meltdown that occurred in the last couple of years. So please try to come in person, or if you can't come in person, please join online. And with that, I thank you all, and at this point, we're going to stop the recording, and you all have a wonderful night, and